Hello there, JC here. Today I'll be doing an intro video of how to use a stock screener through Yahoo Finance. The purpose of a stock screener is to eliminate stocks that don't fit your investment criteria of what you are looking for as you're about to see. Now, maybe you have no clue of what to look for in the first place. You haven't quite adopted a financial strategy yet. At any rate, hopefully this example can at least give you an idea of how to approach a stock screener. For simplicity's sake, I'll be using a filter method from the book The Intelligent Investor by Benjamin Graham, who was Warren Buffett's mentor. I'm not going to get into the jargon of what each filter means. I'll leave that to you, and that way we can keep this video streamlined. If you don't know how to access the stock screener, I made a video about that previously, and if you have further interest in Ben Graham's screener filters, I'll post all the filters in the description, as we won't be tackling all of them in this video. Okay, let's get started. So you'll come to the main screen here, and right away we want to input a couple of things here in region. We're going to do Canada, and we're going to do the United States. I have a bias towards both these countries since I have a lot of family who live in both. So right away under estimated results, you'll see there are 20,373 stocks available to choose from. But that'll of course whittle away as we add to the filters. So under region, there is a plus sign with add another filter. Let's hit that. And as you can see, there's just miles of filters that I encourage you all to just, become more familiar with as your investing journey continues. So there's going to be 5 items that we're going to be picking from here. One of which is price to earnings. Then we're going to head all the way down to valuation measures, current ratio, market cap, price to book, and last but not least, consecutive years of dividend growth. As you can see, estimated results are still at 20,373 because we haven't added anything. We haven't added any units to these filters yet. So under region, price to earnings, we're going to change greater than to less than 15. So that has now chopped us from 20,000 down to almost 13,000. And current ratio, we want to be above 2. Again, estimated results has now got us down to close to 5,000. We want to go large cap. A huge drop off now down to 214. We want to, in price to book, we want to do less than 1.5. And then finally, consecutive years of dividend growth, we want to keep that greater than, and it's going to be 20. Now, as you can see, the screener points out the obvious. Your screening filters are too strict. So in that case, if we look at our screener and we still want something to pop up, well, what do we want to be a little more lax on? I would suggest in our case, for this example, we chop down consecutive years of dividend growth from 20 to 10. 10 is still perfectly fine. There's nothing wrong with 10 years of consecutive dividend growth. And look at that. It's still pretty strict overall, but at least it gives us one company. So let's just find out what that company is. Hit find stock, and you'll see down where it says results list, matching stocks, principal financial group. So who knows, that might be a company worth exploring. Anyways, everybody, if you enjoyed this video, then please do the cliche thing as always and super smash all the buttons of the like and subscribe variety. Check out other videos in my How to Use Yahoo Finance app playlist, and I'll see you all in the next video.